I am not a licensed financial advisor. So everything tonight is for informational purposes. I think it is great information, but it is just for informational purposes only. All right, let's get to work. And something I do want to talk about, and where's my notes? Oh, no, where's my index card? I think I know what I was going to say. Dang it. I keep all my notes, but anyway, I know what I was going to say. I want to talk about, and I'm not going to lecture you, okay? I just want you to be aware of what short selling is and the risks, okay? So if you're not familiar with short selling, I will do it really quick. I'm guessing most of you at least understand the idea. But the idea is you sell a stock first. Okay. And if this stuff sounds weird, again, I'm not going to get that much into what short selling is. Go to YouTube. Investopedia is a great resource. The Stocks and Trade blog is a great resource. SteadyTrade.com, a weekly podcast I do, is a great resource. So I'm not going to spend a bunch of time talking about what short selling is. But the idea is you sell a stock before you buy it. You sell first, then you buy it back, and you collect the premium. So you're in essence just reversing the time, okay? So the goal of any short seller is to sell at the top and buy at the bottom. Just like if you're going long. If you're going long, you want to buy at the bottom, sell at the top. Now, you're never going to get tops and bottoms, but you get the idea. You're just reversing the time. And you're selling, you're instead of buying first, selling later, you're selling first, buying later, and then you're collecting the premium, or you're paying the price of a non-profitable trade. And if that stock goes up as a short seller, you're paying that premium. You're losing that money. So that being said, something I just want to talk about, because I know short selling is attractive. I know there's a lot of very vocal short sellers out there, particularly on Twitter. Listen, I think Twitter is a great resource for trading, but for some reason, the short sellers are the most vocal on Twitter. I don't know why. For some reason, short sellers are wired to tweet all day long. So I get it that it's attractive, and it's a very profitable strategy, okay? There is no doubt some of the best trades, and we're going to talk about those setups tonight, are short setups. But I want to make 2 points. Remember, you have potentially unlimited losses shorting these stocks, particularly these low float stocks. Remember, if some of these stocks will run 300, 500, 1,000% in a day. You short that stock early, you're done. Okay, you are done. Your broker buys you in when your account is near zero. You've just taken your $5,000 account down to $450 or lower in one day. So it's very, very dangerous. Now, the reason I make that point is I want you to understand short selling. I want you to listen, nobody cares more about your success than me, okay? If you're familiar with me and the podcast, I want everyone to be successful. I don't care if you're young, old, if you're American, if you're European, if you're African, if you're Brazilian, if you're male, female, rich, poor, I want everyone to succeed. So I hope you become the greatest, if that's what you want to do. If you want to be a short seller, I hope you become the greatest short seller in the history of mankind. Now, but this is the last point, and we'll get to the charts. I believe this from the bottom of my heart. If you are struggling currently, or if you're just getting started, if you can't profit consistently as a long biased trader, I truly do not believe in this insane bull market. It was different 10, 12 years ago when I got started. Okay, I got started in 2007, 2008. Everything popped and dropped. Stuff today, things pop and they continue for months, okay? Look at Beyond Meat, okay? If you shorted Beyond Meat 2 months ago, you're dead. You're done. That stock went from 60 to 250 in a couple months, okay? But if you are not consistently profitable as a long bias trader, I do not think the solution is to get aggressive on the short side, okay? Work on your risk management and work on your discipline, okay? This is the biggest thing that so many traders lack. They don't have the discipline to take that small loss. Now, you can be long a stock and they can go bankrupt. You know, they could go to zero and you could lose everything. That happens infrequently. Typically, if you're long a stock and it goes against you, it just grinds lower, 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 lower. You're losing money, but you can get out today. You can get out tomorrow. It stinks. Nobody wants to be a quote unquote bag holder, but you can get out typically before you blow up your account. If you can't take a loss, if you're bullheaded, listen, if you got an ego, if you're bullheaded, the worst thing you can do is be aggressive on the short side. Because if you can't be wrong and you can't take a loss and these things start going against you, it gets ugly really fast. Okay? Those are the points. Last point. Remember, a lot of these stocks are very, very hard to obtain or borrow. You can buy, basically any brokerage account will let you buy any stock. You got to be very selective on the broker you choose to allow you to short these low price stocks. So there's a lot of roadblocks is what I'm getting at, but let's get to work. I'm not trying to scare you away. I just want you to know, in summary, if you're struggling, if you're like, man, I just started a month ago and man, all my trades are red. I keep losing. I really don't think short selling is the solution. Right. Like that amazing introduction? Did I get you pumped up to learn about short selling? You're probably like closing the webinar, oh, great. Shorting sounds awesome, Tim. But the point is, if you can follow the rules and you can trade the best setups and you can be disciplined and you can take stop losses, you can be a great short seller. All right, let's get to the whiteboard and get to the agenda. So number one setup is what I call the dead cat bounce into resistance. So what is this? Let me get this a little bit bigger. So this is a long-term downtrending stock, okay? So this red line is a 1-year chart, 5-year chart. I mean, this, and you're going to see this pattern a lot in low price stocks, okay? This stock has just done nothing but fade for months, maybe even years, okay? Some of these stocks will literally fade for years. What you're looking for is that big move with certain criteria. You don't want it to be in a hot sector. What does that mean? Okay. If marijuana stocks are hot, this pattern is not for marijuana stocks. If, blockchain stocks are hot, if green energy, electric cars, all these different sectors that get hot from time to time, you want to avoid shorting this long-term downtrending stock if it's not, or if it is in a hot sector, okay? You also want to be very careful if it's a low float stock. So that means it's a stock that is less than 10 million float, or even less than 5 million. Those are the really dangerous ones. So the float is the freely tradable shares. If you're not familiar with float, again, Investopedia, Steady Trade Podcast, Stocks to Trade blog, get familiar with float, okay? If you're going to trade these low-price stocks, you need to understand what the stock float freely tradable shares is. The other thing is it's not an earnings winner. Today, right now, we're in earnings season. Be very careful shorting a long-term downtrending stock that is up on earnings, okay? That earnings can really turn a stock around. So let's talk about a setup for the dead cat bounce into resistance. One of the favorites is a sketchy biotech, okay? And when I say sketchy, no revenues, no products, maybe they're in like one of my favorite sectors is like what I call an obesity gadget. Okay, we've had penny stocks. OBLN makes a balloon that you swallow, and it's supposed to stop you from eating. We had a penny stock a year or so ago that, you actually install a tap into your stomach, and you eat, and then you go to the toilet, and you open this tap up, and it like pumps the food out of your stomach. Okay, that or a stock that is pivoted. Okay, I remember IGC a while back. They pivoted from, they did heavy equipment rentals like bulldozers. Then they pivoted to gold or Bitcoin, and then I think they even pivoted to weed. Okay, all of these sketchy pivots, sketchy biotechs. When you get that long-term downtrending stock and it spikes on dubious news, it's not low float, it's not a hot sector, and it's not an earnings winner. You look for that thing to spike into resistance, which is, in this example, that $2 area, and then you hammer it, So you're hoping for that. In this situation, you've got 100% bounce, okay, and it's got all these criteria. The stock bounced from 1 to 2, and then it can't break that $2 resistance level on a chart. If you don't understand support and resistance, go to the university site, okay? I know I'm throwing out a lot of jargon here, but we only got an hour. If you don't get these jargon terms, we have tons of resources. So write it down, okay? Write down support and resistance, and then Google it, check out the blog, the podcast, etc. Any terms I mentioned, write them down. We'll get you answered. And we got Q&A later, okay? So once it spikes into that long-term chart resistance, you look to short into that level. And then so often, especially in sketchy biotech land, you get that fade. And you could make, listen, this stock spikes from 1 to 2, and it fades to 150, 125. Stock's still up, 50%, 25%. But you made 50%. So avoid the dead cat bounce, hot sector, low floats, and earnings winners. Other than that, look for that pop and then that fade after it spikes into resistance level. Next is the parabolic candle, everybody's favorite and the most dangerous. Again, I blame social media, but the parabolic early morning spiker, this is by far the most dangerous setup, okay? People love to short these because they quite frequently snap and snap hard, but it is risky, risky, risky. If you have discipline, if you can stick to a trade plan, fine. But, man, if you're struggling with your discipline, please avoid this setup. Let's discuss the concept. So what you've got is a huge gainer in pre-market. They issued a press release early. Maybe they had a 7 a.m. press release. This stock has been building all morning, uptrending, uptrending, uptrending. From 7 a.m. into 9 a.m. into the market open. What you're looking for is that parabolic exponential candle. What does that mean? Notice how this stock has been uptrending. These are candlesticks, representing candlesticks. I'm no artist. I'm no artiste. So, I'm no, who's the guy on PBS? I'm no Bob Ross, okay? But happy little candlesticks. Anyway, you can see that it's just gradually gaining momentum. It's uptrending, but it hasn't had that blow off top, okay? That's a term I want you to know, the blow off top. Notice how we get the market open, 9:30 open, and then that first candle, that first 5-minute candle is, in this illustration, it's twice as big as the biggest candle of the morning. That's your blow off top that you're looking for. So when you get that candle relative to the previous candles, that is just, it's exponential. It's parabolic to the previous candles. That's your short signal. But damn it, please don't enter until you have a stop in mind, and please stick to that stop. Typically, when you get that parabolic move, you'll get a hard slam and you take your profits quickly. Okay. If you short in this scenario, the stock went from 1 to 2 and then from 2 to 6. So see what I'm representing there? 100% move into the market open and then a 300% move on top of that. It's now up in this scenario. It's up 600% on the day. It opened or closed yesterday at $1. It's at $6. You short that parabolic move, you cover into the washout. So if it drops to 550, drops to 5, you take profits and you move on. Never overstay in these. This is a quick trade, in and out, and always. I know I'm being repetitive, but I just see so many new traders blow up, okay? Listen, again, I want you to be successful. I want you to be trading 12 years, 20 years, 30 years down the road. Just please stick to your stop loss on this setup. It's one of the most rewarding, potentially rewarding setups out there, but it's also very dangerous, okay? So look for that exponential candle, short into that with a stop in mind, with a plan in mind. The high of day reject, one of my favorites from quote unquote back in the day. So what we're looking for is, well, let me break down the slide. Okay, this is the reason I say this is my favorite pattern. Is I think it's one of the. This is I went from the most dangerous pattern to what I think is the safest pattern. So this is the one, if you're experimenting with short selling, this is the one I want you to try tomorrow, okay? If you're like, hey, Tim didn't scare me away from short selling last night, I want to try a short. This is the one I want you to try, okay? So this is a junky stock with a history of failing, okay? What does that mean? It spiked in the past and it's failed, okay? So you're looking for those big, this is right down this term, doji candles, okay? I research what a doji candle is. You're looking for that in the past. That's that big spike and fail. Big spike and fail. That, you see that on the 1 year, 1 day chart? You're like, okay, this stock has a history of failing. History doesn't repeat, but it does rhyme. Ideally, it's fluff news. So it's, they got a new CEO. They're potentially pursuing some new business line. Okay. They're starting a biotech study, stuff that doesn't have meat on the bone. Okay. And we talk about news in these webinars. You're looking for a higher float stock, so higher than 10 million float. The one and done chart, again, that's that history of failing, that doji candle. Not a hot sector, and you don't want it to have quote unquote ridiculous value. Okay, this setup, if a stock is trading, listen, we see a lot of these low float stocks, they'll trade 100 million shares on a day. This is not, if you're trading a $2 stock that's traded 100 million shares, avoid that one or be very careful. You're looking for volume, but not 100 times normal volume. So let's talk about the chart. So you've got that, we'll start here on the left. You've got that early spike in the morning, spikes hard, pulls back, then starts consolidating through the middle of the day. Now, this is what's called the high of day reject, because what you're looking for is, notice what I've got here. I'm drawing you a double top into the afternoon, basically post 2 p.m.-ish. So around 2 p.m., the stock tries to break, can't, tries to break, can't, and then starts fading. You're looking to short that breakdown area. Then the reason I love this setup, the reason I love this as my favorite, is you have a clear stop, okay? Write this down. And I mean this from the bottom of my heart. If you are short a stock that makes a new high of day, please Google where is the closest psychiatrist, okay? You can never stay short a stock that makes a new high of day in the afternoon. That's why I love this setup. Because if this fader that breaks down in the afternoon, if it hits a new high of day, you just get out. Because on your monitor is that note from Tim on July 31st saying you're crazy if you hold short a stock hitting a new high of day. I love it because it's a perfectly well-designed setup. So now, the other great thing about this setup is I think it's one of the best for traders under the PDT. Okay, if you're under the PDT, you know that ideally you're trading stocks overnight because then you're not using up all your day trades and you can trade every day that way. So what's great about this setup, if you get that fader, you're green on the trade, it's sitting on the low of the day. If it's sitting on the low of the day, there isn't substantial news. You got a solid overnight hold here. And then typically the stock's going to gap down in the morning. You cover into the gap down, you collect your profit, and you didn't use a day trade. So junky stock with a history of failing, up on fluff news. It's a higher float stock. It's not in a hot sector. It doesn't have like 100x volume, but it is up big on the day. Can't break a new high day into the afternoon. You short the breakdown on the chart. Notice how it broke the lows. That's why I picked that as the entry. Or it broke the consolidation area of the afternoon. And then what I love about it, it's got that clearly defined stop where you know you're a lunatic if you're not taking that stop. Next is the late day VWAP fail. Very similar to the other one. Only thing is, this can be used with a low float stock. Because of the fact that, again, if you're not familiar with VWAP, we talk about it a lot. There's a lot of resources out there. But this is a stock that's up big. It's near the highs. And then again, into the afternoon, it breaks below VWAP. Now, what you're looking for as a stop is that quote, that reclaim of VWAP. So as this thing breaks lower, you're shorting into that drop below VWAP. And then if it reclaims VWAP, so if it goes back above VWAP, you're like, okay, I tried the trade. It didn't work. I move on. So very similar to the last setup, other than the fact that with the last setup, I'm using more of support and resistance levels, okay? And I'm looking for that high of day, multiple high of day reject. So I know they're similar, but I'm looking for that inability to break the high of the day versus just that late day VWAP crack, okay? This stock, you can see, held its highs. It didn't double, triple top. It's been near the highs all day, but then late day, it cracks VWAP. That's your entry. The reclaim is your stop, okay? Another afternoon pattern, again, great. If you're going to short under the PDT, it's great for you because now, ideally, the stock fades all afternoon, you hold overnight, you cover the next day. Now, one thing I do want to say about the PDT and shorting. Never, ever, 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 ever say, I'm going to hold this losing short because I don't want to use a day trade. That is, I shudder to think how many traders that has destroyed. If you're down to your last day trade and you're short a momentum stock and it's going against you and you say, man, I don't want to use my last day trade. I won't be able to trade till Monday. Like say it's today. Say it's Wednesday. You traded Monday, Tuesday, Wednesday, or Friday, or let's say you just used 2 day trades today and you're down to your last day trade. And this stock is squeezing and you're like, man, I don't want to, not be able to trade till next Monday, next Tuesday, next Wednesday. I'm just going to hold and hope for the best. Please never do that. It always gets worse. It never gets better. It always gets worse. So if you're down to that last day trade and you're short, and you're getting squeezed, you take that loss, you paper trade Thursday, Friday, you study Thursday, Friday, you take that loss, and then you come back when you get your day trades back. But never stay short a stock to save a day trade. Please, I'm begging. Next is the daily chart fader. Okay, this is more of what I would call a swing trade type setup. So this is beyond meat. Okay, if you're familiar with BYND, the stock is, it's a $200 stock, but it moves like a penny stock. You're looking for those just, 5, 6, 10 green days in a row. Then that first red day, okay? A lot of people will call this the first red day pattern, okay? So you're looking for, in this scenario, I drew 4 green days in a row. It could be 10. It could be more, probably never less than like 3 or 4, for this first green or first red day pattern, you're looking for at least 3 to 4 big days up and green every day. No red days in there. Then you're looking to short that first red day. So the stock has been up in this scenario 4 days in a row. Tomorrow, okay, say this, and notice the candles look the way they do for a reason. Notice day 1, it was up, not a ton. Day 2 was bigger. Day 3 was bigger. Day 4 was huge, that big move. Then tomorrow, so let's say that 4th green candle is today, it's Wednesday, and you're stalking this stock, and you're like, man, I think BYND is going to crack, okay? You're looking for that red open tomorrow after those multiple green days and the big green day. Then you look to short that red day, okay? Stock's gapping down, it's opening red. Then beautiful risk management, beautiful idea in that you can you can risk the red to green move. So let's walk through it. Tomorrow, let's use BYND as an example. They had the offering out tonight. It probably gaps down and fades. So let's say BYND gaps down tomorrow. You short that red move, and then you're just risking off of the previous day's close, that red to green line. So if the stock goes back green on the day, you're like, okay, didn't work, stop out, stick to my plan, and move on. Now, the beauty of this is a swing trade setup. I think at BYND, and time will tell, I think if it gaps down tomorrow, if it closes red on the day tomorrow, I think you've got multiple red days in store. So swing trade friendly, PDT friendly, okay? Now you're holding this thing short 2, 3, 4 days. and you're not burning those day trades. So, great pattern. But you gotta wait, okay? Nobody wants to wait in trading. Everybody wants instant success. So if you wait for that move, then the potential is there, okay? But clear defined risk to reward. If you get that big move, it's a very potentially profitable setup. So I'm going to jump over to the Q&A here. So drop your questions in chat. And then let's get to the Q&A. And I do want to talk about something real quick, though. Hopefully you guys enjoyed this webinar, and gals. Okay, I say guys a lot, but it's a Midwestern thing. But I want to just say this before we get into Q&A. Thank you for being here. I really appreciate each and every one of you being here. If you made it this far, I think it's a really good sign, because more than anything else, if you're going to be successful, you got to be dedicated, okay? It's 8 o'clock at night. I mean, I'll get done at 9 o'clock. I get up at 4:30 in the morning, okay? It's late for me. I appreciate your dedication, taken away from family time, etc., to be here in this webinar. Shows you're dedicated to be here on a Wednesday night. And I think a lot of traders make the mistake of thinking that all they need to do to be a great trader is a good memory. I mean, I showed you all these patterns. I want you to memorize them, but there's so much more to it. Because if all it took was memorizing, wouldn't every finance school graduate be a millionaire, okay? If all you had to do was memorize a bunch of facts, everyone that went to business school would be a millionaire. The answer is simple, in my opinion. There's more than theories and formulas to succeed. You can't learn to trade from memorizing formulas in a trading book any more than you can lose weight from memorizing recipes or reading exercise plans, okay? It's like it's like buying a treadmill and thinking you're gonna lose weight. You gotta get on that treadmill. And it doesn't matter, I don't care what it is. You have to put the work in the real world, okay? You can't buy the treadmill. You can't buy the self-help book. You gotta put in the work and the time. And if you're gonna learn how to trade, you have to practice trading. That's why I think my pro team does so well. Stocks and Trade Pro is the mentorship program where I trade live with traders every single day, twice a day, okay? 2 times a day, sometimes 3. Today I did 4 webinars, counting this one. I'm there every day. And if you're going to practice, do it with somebody that's done 12 years and has a passion of doing this. I love teaching this, okay? I'm 14 hours into my day, and I'm fired up to help you guys. But the problem is, it's a very small group. It's really hands-on, but I only want to work with a small group of traders. I don't want to work with 5,000 people. I want to know your name. I want to know your face. I want to know your trading style. I want to be able to cater what we do to you in a small group. And listen, I'm very good at trading this niche, okay? I've done 1,550 webinars in 3 years. I don't know anybody that's done 1,500 webinars in 3 years, never misses a day, and does 3 to 4 webinars. I think it's the best way to learn. But at the end of the day, I'm not your mom. I'm not going to ride you to do your homework. If you don't want to do the work, you don't make the money. Doesn't hurt me. What I want to get is a small team of driven traders who want to make serious money and learn and grow and get better every day. Now, you need to have some time, okay? I'm doing 2 webinars a day. You got to be able to show up a lot of them. You got to have some money to trade, and you got to be willing to work, okay? I think, I'm here every single day, on time, every day grinding. And if you want to put in that commitment, I think you can be successful. I can show you where the gold mine is. I can put a shovel in your hand and show you where to dig, but unless you're willing to get your hands dirty, it won't matter. So if I haven't scared you away and you're serious about trading, definitely keep an eye on your email. My team will be in contact with you. And I tell you what, I'd love to have you in. I'll be here and I'll be live in chat at 7 a.m. or earlier tomorrow. And I got a webinar at 9 a.m. I got a webinar at 3:30 p.m. and I'm in chat and I'm available by email. So if you really want to get your hands dirty and get after it, check out, watch for that email from my team. All right, let's wrap this baby up with some Q&A. I'm going to go back to the webcam and I'm going to turn the screen off so that I've got your questions in chat. So, lots of questions. All right. Let me get through as many of these as possible. Okay, so let's get started. Number one, love the Q&A. Love it. Are the dangers of shorting as drastic in mid-large cap stocks? No. Well, unless you're short BYND from $60 a share. I tell you, I think that shorting what I call real stocks is a great strategy. I go back to these Twitter guys and these chat rooms and stuff, and they want to short these big movers because it's exciting, it's degenerate gambling, but it is very dangerous. Now, the beauty of mid-cap, large-cap stocks, especially that last pattern I went over, that multi-day runner with the big day and then the first red day, so much lower risk, okay? Listen, as much as BYND went up, it never went up 600% in a day, okay? Never even close. So it will take you a little longer to make money on the short side. Longer, I mean, maybe you got to wait a day or two or something. But no, if you want to learn short selling, please start with real, higher priced stocks. When you short sell, do you pay attention to stocks that are hard to borrow? Yeah. Again, great question. Listen, you want to get caught in a short squeeze? Short stocks that are really hard to borrow. Okay? The simple fact is,
you son of a bitch.